this is the tax twist that nobody saw coming, because HMRC has hit over 1 million pensioners with unexpected tax bills this year. And that's, of course, thanks to freezing tax thresholds and rising pensions. Now, many thought they were under the tax limit, but surprise assessments are landing on doormats across the country, leaving retirees confused, frustrated and facing year-end financial stress and, to be frank, feeling downright furious. Well, joining me now to discuss this in the studio is the policy analyst at the TaxPayers Alliance, Shimeon Lee. Shimeon, welcome to the show. The dreaded fiscal drag, it's something we talk about all the time on GB News. The tax thresholds stay the same, but of course, inflation goes up, your pay might go up, and that means more and more people are paying tax. But the levels of pensions being dragged in this year is simply astonishing. Tell us more.
Well, you're absolutely right. Those with incomes under the personal allowance, which is about £12,500, generally do not pay taxes on their income. But because of these frozen tax thresholds, which have been frozen since 2021, more and more people are being dragged into paying taxes. That includes more people being dragged into paying the higher rate of income tax, but also a lot of pensioners who are being dragged into paying taxes at all because of their state pension rising every year because of the triple lock. So the threshold stays the same, but the pension goes up, meaning more and more pensioners are being dragged into paying taxes.
And give us an idea of the numbers of people that might be finding one of those dreaded brown envelopes plop on their doormat this year. So
I think the analysis by the Telegraph was based on the number of simple assessments. Now, simple assessments are how HMRC collects taxes from those people who are not on pay-as-you-earn schemes. So, for example, pensioners as well as those who are self-employed. I think the number has risen by a massive amount, around 75%. So it's gone up from around 700,000 to about 1.3 million.
1.3 million people will find themselves paying tax, whereas previously they didn't. Now, this marks the highest number on record and more than double the average annual volume for the previous 6 years. A lot of pensioners who've worked hard their entire lives, they get the full state pension. That's around about 11,973 quid. They've only got to earn, through their own private pensions or work on the side, whatever, 527 quid, and they're going to fall into the tax bracket.
Well, you're right. Actually, this is quite symbolic of how the government sort of gives with one hand and takes with the other. Now, frozen tax thresholds affect the poorest people in the country the most, and they can be really a nasty surprise for those people who did not expect to be paying taxes and who are already struggling to make ends meet. Now, the personal allowance should be, if it had risen with inflation, so if it had not been frozen, it should be around £15,500.
That's a huge difference.
It is, and that means that people are paying taxes on an additional £3,000 worth of income. Now, if you take the income tax rate of about 20% plus the national insurance rate of about 8%, that gives you about a 28% tax, and that would be equal to about 840 extra pounds for a basic rate taxpayer.
So 840 quid extra in tax. The winter fuel allowance grab, a lot of pensioners are still absolutely reeling from 300 quid. That's over a grand's worth of extra tax revenue from people who simply paid into the system their entire lives. And Shimeon, it's going to start an entire conversation once again about pensioners politically feeling like a punching bag, feeling like a cash cow that can just be milked dry.
Well, I think you're absolutely right on that point, in that taxes have been rising all across the country, not just on our pensioners, but on everyone else as well. In fact, we're actually reaching about an 80-year high tax rate. The tax burden on this country is reaching an 80-year high. And of course, it's not even clear whether or not HMRC will have the capacity to deal with all of these claims, because more people being dragged into the tax system obviously means a greater administrative burden for HMRC. In fact, last year, I think taxpayers collectively spent about 800 years on hold with HMRC, and adding about 700,000 new claims to that system is not likely to help things.
I'm laughing slightly hysterically, Shimeon, because I've been one of them. Now, I fall to sleep with that music in my ears. It's the soundtrack to my nightmares. On a serious point, a lot of aged people very overwhelmed by the notion of having to do the paperwork, having to go online to fill this in. Is there a burden on their time to do this, or do they get automatically stabbed with a bill?
Well, simple assessments are actually supposed to simplify the system. So if there were not a simple assessment, they would have to do a self-assessment. But of course, at the end of the day, they're still being hit with an additional bill. That's an additional thing they have to deal with that they didn't have to deal with before.
So they don't have to go online to fill it out, but that'll be automatically billed. And there we go. That is not the kind of thing that pensioners will want, particularly after that winter fuel allowance grab Fascinating stuff, and thank you for coming in to explain that to us in what many people will feel is yet another tax raid on pensioners. That's Shimeon Lee, the policy analyst at the Taxpayers Alliance. Excellent guest. Please come back and join us again in the studio.